Good morning. Welcome to the B.F. Anderson Technical Report for June the 25th. This week we're going to make some changes. I'm going to adopt some additional indicators as what we will use as a temporary set of indicators, basically because of what's going on with the coronavirus. The other indicator that I'm going to drop off our list is anything to do with the small cap indexes. I've just reached the conclusion after attending a webinar last week that the small cap indexes are basically flawed, and there's really one simple reason, is that once a company goes over $5 billion in market cap, it gets dropped out of the indexes, and as a result, the really great growth stocks that, grow past $5 billion are getting dropped out of the indexes. Therefore, it's just not as reliable as I would like. So let's take a look at a couple of issues here that have to do with the coronavirus. Wall Street Journal, June 16th, assets in money market funds have swelled to $4.6 trillion, highest level on record. Investors are sitting on the biggest pile of cash ever. This is all due to fear of the crisis. Banks are getting cash due to fears. This was on the 19th. U.S. banks are swimming in money as deposits increased by $2 trillion amid the coronavirus. Wall Street Journal, basically an article saying that there's going to be mistakes out there made by these studies that are being done, for the coronavirus. And being that I do believe that the market is efficient, in other words, the efficient market hypothesis is basically a theory that says that the market has all the information, that it knows everything that's going on out there. So it's really kind of crazy not to pay attention to what stock prices are doing because the market is basically discounting the future. So if we take a look at a graph that I think is very interesting. Now this is the year 2000. This is 9/11 in 2001. This is the airline index. Now, as I've gone through from meetings to meetings and talking to people, I say, okay, if you had to select an activity that you found troubling because of the virus, what activities would you identify? And, overwhelming majority of people are saying the one activity they don't want to do is get on an airplane. And then the other activity is they really don't want to go on a cruise because this is where the big potential exposure to the viruses would be. So if we go back to 2000, and this is just to make the point about the efficient market hypothesis, you can see here this is the airline index. In 2000, right around January of 2001, the index hit an all-time new high and then started to break down and break down. Now, I happen to have had a neighbor across the street from me who was an airline pilot. And I actually asked him, I can remember our kids were carpooling together, and I asked him one day, I said, is the airline industry okay? I'm seeing a lot of deterioration in the airline stocks. And he basically said, no, business was fine. Well, anyway, the terrorists come along, fly into the buildings, and you can see here 9/11. So the market actually started discounting the collapse of the airline stocks as early as, April, May, June of 2001, whereas it wasn't until 9/11 that we got the actual event. So the market is efficient. So if we look at the airline index now, here's the coronavirus. We can see here like a waterfall decline, made a low on the 23rd, and you can see here basically a series of higher highs and trying to make some higher lows in here. We actually rallied here and then pulled back. Now this is as of yesterday. The market was down hard yesterday. The airline stocks dropped by almost 8%. So what my theory is here is that I do believe there's the possibility of a vaccine or a treatment that hasn't been announced yet. But I think the market will know, and the market will know in advance. Now, if this particular index breaks down and starts making lower lows and really gets in trouble, that's going to tell you basically the market's discounting a second wave of the virus. However, if this thing were to rally, make a new high, and even break the 200-day moving average, I think it's telling you that there's a vaccine out there. So here's Carnival Cruise Lines. This is just the same basic story. You can see here it dropped 11% yesterday. Moving sideways. Again, if it breaks down dramatically down here, we're in the second wave. If it rallies up here, probably a vaccine is on the way. Now, let's go ahead and we're going to spend some more time on that as we get into the video. I'm going to show you the indicators that I have put together here. All right, Nasdaq continues to look constructive. We've been having a tough period here yesterday. However, it has held above the upper moving average. Everything is still in an uptrend. Nasdaq continues in a bull market. On a weekly basis, you can see here we're still above the 35-week moving average. Constructive uptrend. Really no problem with the Nasdaq. Now, this is the S&P 500 on a monthly basis. Excuse me. S&P 500 on a monthly basis, you can see here month by month, it's continuing to stay in an uptrend. We're holding above the upper moving average, and the both moving averages are, kind of flattening out a little bit, but continuing to turn up. Here's the Nasdaq. Nasdaq's the strongest index. Looking at it on a monthly basis, you can see that the pattern is very positive. Nasdaq has actually recently hit an all-time new high. Here's China. China looking better. Continues on a buy signal. This is the PGJ, which is all the Chinese stocks that trade here in the United States. Close to making a new high, so keep an eye on China. All right, here's the aggression index, where we're taking a ratio of the Nasdaq compared to consumer staple stocks. Continues to be very strong. This is the same index, the same ratio on a weekly basis. As long as we stay above that lower moving average, and that lower moving average has turned up, the aggression index is on a buy signal. Now, here's the, we've changed here. We used to have the small caps on here. Basically, looking at interest rates, continue to be flat as a pancake, not seeing much progress there. Here's the price of oil. Price of oil is basically flattening out. The 200-day moving average is in a downtrend. I would continue to avoid oil. Here's the put-call ratio, where we're measuring fear and greed. We got a ton of fear around the 23rd of March, which was the low in the market. Great time to buy. Here we are now. We got real aggressive here, as you saw with the aggressive index. We got way down here into a very optimistic, what I call a hot area, where the market basically got too hot. And my advice has been here would be, if you need to raise some cash, probably a pretty good time to do it. If you have stocks in your portfolio that aren't acting right, might be a good time to let them go. All right, here we have the S&P large cap on a daily basis, and this is the 25-day and the 50-day moving average. Continues to be in a positive trend, however, is starting to weaken a little bit. You can see here it has held above the 200-day moving average, however, pulling back somewhat. New lows, no problem. We only had 3 yesterday. It's really amazing with the market selling off like it has been that we're getting so few new lows. All right, here is the indicator that I want to adopt. This is a company. Now, what I'm going to do is I run my numbers twice a week, and we get what we call the top 5, which are the 5 strongest stocks in the portfolio. So if I have a vaccine stock or a pharmaceutical stock with a treatment that makes the top 5, I'm going to feature that every week in this block right here. Now, this company, Novavax, now we're looking at a stock here. Here's your 200-day moving average. You can see here the stock is in an incredibly strong uptrend. Actually hit 81 yesterday, and it has moved since the beginning of May, it has gone from 20 to 80. It's quadrupled. So they claim to have a vaccine. I would not be surprised if the market's not telling us that Novavax has a vaccine. I just don't believe the stock would be this powerful if they didn't have something. Now, this is Carnival Cruise Lines. We're going to keep an eye on that. Again, a break above the 200-day moving average would confirm the vaccine. However, a break to new lows would be another story. Okay, I also have the airline stocks here. Again, cannot get above that 200-day moving average. Is showing some weakness. If it breaks down in here, we've got a problem. All right, top 5. The Dex. This is Dexcom. It's a stock that deals with diabetes. Continues to be in a nice uptrend. However, starting to challenge that 10-day a little bit. Here's Novavax. Makes the top 5. Do they have a vaccine? We'll just have to see. But the stock is acting incredibly strong. Nvidia. Semiconductors continues to be in a good pattern here. however, is kind of challenging that 10-day moving average. This is PayPal Holdings, very nice uptrend. This is where they announced earnings. They had 7 million new customers. PayPal continues to be in a very positive uptrend, and I do believe that what's happening here is that due to the coronavirus, the brick and mortar stores are not doing well, and the e-commerce businesses are booming, and PayPal is part of that story. Here's Zoom videos, same concept. They're beneficiaries of the coronavirus. In fact, I met with my doctor the other day, and instead of going into his clinic, he actually Zoom videoed me, and we did everything over the telephone, and it was quite easy to do, and I kind of liked it. Anyway, Zoom video, very, very strong pattern. So all in all, it appears that the market continues in a bull market. We want to watch what's going on with these indicators that determine the direction of the coronavirus. If you have any questions, please give me a call. Thank you very much.